I used to think you become a millionaire by grinding harder and saving more. That's true, but it's also the slowest way to do it. I've been investing for over a decade. I hit $1 million net worth once, and now I'm about to do it again in half the time without doubling my effort. Here's what changed. I learned the one system that accelerates wealth. And in today's video, I'm going to show you this system so you don't waste a decade chasing your first million through brute force alone. Before I do, I want to be honest with you. This isn't a get rich quick video. I'm not going to tell you to drop everything, start a dropshipping store, and quit your job by Friday. What I'm going to share is slower than that and way more reliable because I've lived it twice. So stick with me, because by the end of this, you're going to see that the path to $1 million isn't some secret locked behind a paywall or a course that you have to sell. It's a system. And once you understand the system, you can't unsee it. Most people don't believe they can build real wealth because they think it takes a special kind of personality. It does not. It takes repeatable behaviors. And here's the frustrating part. Millions of people have crossed the 7-figure mark using a simple method that's been right under our noses, yet almost nobody sticks with it. Why? Because it doesn't feel like enough. It feels too small, too slow. So people look for shortcuts, they jump from strategy to strategy, and they stay broke while waiting for the perfect move. I was guilty of this too. Early on, I was looking for an angle, the edge, the thing nobody else knew about. And what I eventually discovered was almost embarrassing because it wasn't some secret. It was right in front of me the whole time. The people who build real wealth aren't smarter. They're not luckier. They're just more consistent with boring things for longer than everyone else. That is it. That's the edge. So let's talk about the first part of this system, the 401k. I know, boring. But this is one of the most attainable, repeatable paths to growing net worth in the United States. Usually offered through your employer, and you can even open one yourself through investment platforms like Robinhood. If you want to set this up today, I put a link to this and all other apps I mentioned in this video in the description. Most people ignore it because it doesn't feel like a real wealth strategy. It feels too basic, so they skip it. They say inconsistent and wonder why nothing changes. But here's why it works. It makes you pay yourself first. Your paycheck hits your checking account only after a portion has already been sent and invested. You never see it. You never touch it. It just works quietly and in the background every single pay period. And that's why each year around 120,000 new millionaires are created using their 401k alone. Let me put that number into perspective. That's not people who made 6 figures their whole careers. That's not people who got lucky with a stock pick. That's people who simply stayed consistent month after month, year after year. They paid themselves first, let the money compound inside a diversified index fund, and one day they looked up and had $1 million. And look, if your employer matches any percentage of your contribution, that's free money. That's an instant 50 to 100% return on the portion of your investment before the market even moves. If you're not taking that match, you're leaving money on the table, completely and full stop. Now I get it. Putting money away that you can't touch until 59 and a half feels uncomfortable, especially when you're younger and money feels tight. But that discomfort is actually the mechanism. It's what makes it work. You can't panic sell what you can't access. Once you've built the habit of paying yourself first, and that money is automatically going into a diversified index fund, the next step gets a whole lot easier. Here's where you lean in, because most people want the flashy move, the perfect stock pick, the side hustle that explodes their net worth, the one hack. But almost nobody wants to do the one thing that gives every other strategy power. Why? Because it's unsexy. It feels too basic, and because it doesn't feel like progress. People skip it all the time. In fact, 94% of the people who built real wealth all did the same boring thing. And it's the reason the rest of the plan finally works. They consistently lived on less than what they made. That gap, what you don't spend, is the fuel. That's it. That's the secret that nobody wants to hear. The gap between what you earn and what you spend is literally the engine behind everything else in this video. It's what lets investing compound. It's what lets opportunities become possible. It's what turns a plan into an actual net worth growth. I love that quote from the School of Hard Knocks. Stay small enough, long enough, and you'll be big enough soon enough. And I think about that a lot because when I was grinding toward my first million, I wasn't living lavishly. I was driving a car I didn't love. I was eating at home more than I wanted to. I was saying no to trips, to upgrades, to things I would have felt good in the moment, but would have cost me years of progress. Was it fun? Not always. But would I do it again? Absolutely. Because that discipline bought me freedom on the other side. Here's the mindset shift that helped me the most. I stopped thinking of saving as deprivation and started thinking of it as buying future freedom. Every dollar I didn't spend was a vote for the version of my life I was building. Once that clicked, the secret didn't feel like sacrifice anymore. It felt like a strategy. And once you've done this long enough, once you've built the gap and you're paying yourself first consistently, something starts to shift. Once you've prepared yourself to let the world give you opportunities by living within your means and paying yourself first, what happens next is a bit bizarre. Life starts showing you the moves you can make. Usually those moves don't present themselves until you've developed some level of discipline with your money and reached a point where you feel safe. That sense of safety usually comes with saving your first $10,000 to $20,000. And I know that number sounds modest compared to $1 million, but it's not about the amount. It's about what that amount does to your mindset. When you have nothing saved, every decision is made from fear. You take the first job offer instead of negotiating. You can't say no to bad opportunities because you need the income. You can't take calculated risks because there's no cushion. But once you have the $10,000 to $20,000 sitting there, you start thinking differently. You stop reacting and start choosing. That buffer gives you options, and options are where wealth actually starts to happen. After that point, things start to happen more rapidly. Opportunities that you couldn't have seen before start to become visible. Maybe it's a real estate deal that needs a down payment. Maybe it's investing more aggressively in the market during a dip. Maybe it's the confidence to negotiate a raise or walk away from a job that wasn't serving you. The money doesn't just sit there. It changes how you start making moves. So how do we go from $10,000 to $20,000 saved to $1 million? You start looking for assets, and not just any asset. You look for the ones that can propel you forward exponentially. Something very important to understand is that time spent holding an asset is more important than almost any other principle. Some purchases won't go up consistently or predictably over time. They might stay flat for longer than you expected, and then all of a sudden they pop. The people who win are the ones still holding when that pop happens. The assets that helped speed my net worth up the most have been the following: real estate, Bitcoin and crypto, and the S&P 500 index. Now, let me be clear. This didn't all grow in the same way. They didn't all grow at the same speed, and they're not all right for everyone. But here's how I think about each one. Real estate gave me leverage. Let me control a larger asset with less money up front. A $30,000 down payment could get me into a $150,000 to $200,000 property. And over time, tenants helped pay down the debt while the property appreciated. That combination is powerful because you're building equity on an asset you only partially own. Your return isn't just on what you put in, it's on the whole thing. Real estate also taught me patience in a way nothing else did. Properties don't move fast. You can't check an app every 5 minutes and watch it go up or down. You're forced to zoom out. And that's actually a feature, not a bug. Bitcoin and crypto gave me upside. It's volatile, it's not for everyone. And I want to be real with you. There were stretches where I watched that part of my portfolio drop a ton, significantly. If you can't stomach that kind of volatility, keep your allocation small or skip it altogether. But for me, managed with discipline, meaning I didn't panic sell, I didn't chase pumps, and I only put in what I could afford to lose. It became a high risk, high reward piece of the portfolio that accelerated growth during the right windows. The key word there is discipline. Without it, crypto will take money from you. With it, it can work in your favor. Now, the S&P 500 gave me the consistency. This is the boring one, but boring wins every time. The S&P 500 has averaged roughly 10% annual returns over the long run. That's not a guarantee, but it's a track record that spans nearly a century. You're not betting on one company. You're betting on the 500 largest companies in the United States collectively, and they're all figuring it out. So it's pretty stable. This is the foundation of my portfolio. This is where I invest steadily, let compounding do its thing, and build wealth without needing to time the market. If you never touch real estate or crypto, you can still build serious wealth here. It just takes longer and it requires staying consistent. And that's really the point. You don't need one perfect asset. You need a few strong assets held over time while you stay consistent. For me, the magic wasn't just what I bought. It was how long I held it and how consistently I kept buying into them. That's a big portion of what people skip. They want it to pop, but they don't want the patience part. I hit my first million with real estate alone. But the moment I decided to add the 401k, the S&P 500, and some crypto into the plan, everything sped up tremendously. Diversification wins every time. And I don't mean diversification in the sense of spreading money so thin that nothing matters. I mean having multiple assets working for you simultaneously, each one doing something different, each one building towards the same goal. Real estate, building the equity, the index fund, compounding, the 401k, growing tax advantaged, and a smaller allocation to higher risk, high reward assets for acceleration. That's the system. And when all those are running at the same time, even at a modest level, the math starts to work in your favor in a way that feels almost unfair compared to where you started. If you can learn to stay disciplined long enough, save your first 10 to 20,000, build your safety net and start buying real assets, you'll start to feel the shift. You stop living paycheck to paycheck. You stop reacting to everything. And for the first time in your life, money starts working with you instead of against you. You've heard people say this. It's not about timing the market. It's time in the market. And I used to think that was just something people said. Now I know it's the whole game. The longer you hold, the more compounding works. The more consistently you contribute, the less any single market event can derail you. The more diversified you are, the less dependent you are on one thing going right. That's when the game changes. You're no longer grinding for every dollar. The system is working even when you are not. That right there is the difference between building wealth through brute force and building it through simple strategies. Because simple systems prosper. So here's where I want to leave you. You don't need to be a financial genius. You don't need a six-figure salary. You don't need a lucky break. You need a 401k set up and running. You need a gap between what you earn and what you spend. You need the first $10,000 to $20,000 in savings as your foundation, and you need to start buying and holding real assets consistently over time. That's it. That is the simple system. It took me a decade to learn this the hard way. I'm giving it to you in one video because I wish someone had laid it out as clearly when I started. If this video helped you, hit that like button for me. It genuinely helps more people find this content. And if you want to go deeper on any of these strategies, I'm going to link the next video right here because it picks up exactly where this one leaves off. Let's go build.